Closing bell exchange right now. Paul Dietrich is back with us from Fairfax Global Markets. He's sitting here with us at Post 9 along with Keith Bliss from Catone & Company. And joining us also is Jack Berugian from UCX at the CME. Keith, I try to understand what motivates the market, what moves it. You know, we hear that maybe the decline of the dollar did cause that dip in the stock market today, but the dollar is at a 3-year low, the dollar index.
And the market's been going up.
So, yeah, exactly.
And actually what we see, so let me start from the beginning. We see the major averages as short-term overbought here. We have for about 2 weeks now, and we've actually been amazed that we've not seen a mini correction or a little bit of pullback. Nothing substantial, but between 2 and 2.5%. Like I would go neutral on the S&P 500, 2770 or so. But I think one of the reasons that it's been keeping up is, and this is counterintuitive, is the dollar weakness. An oversold dollar and an overbought euro is a very strong pattern for U.S. equities.
All right, you know, we got a sidebar on this. Let's go to Washington very briefly. Everybody stay right there. Ilan Mui, you have something on the dollar for us. What?
Bill, White House Press Secretary Sarah Huckabee Sanders trying to do some damage control here as Treasury Secretary Steve Mnuchin's comments clearly rattled the markets. She said that the White House believes in a free-floating currency and that the dollar is very stable. But she was pressed on this point during the White House press briefing, saying, is the White House concerned about how the Treasury Secretary spoke about the dollar? She reiterated those talking points, saying once again that they do believe that the dollar is stable. It should be the world's reserve currency. It should be free-floating, but not giving any more leeway than that, guys. Back over to you.
All right, thank you. And in fact, we have live team coverage on this. Eamon Javers is outside the White House. You were just in the briefing room. Tell us more.
Yeah, Bill, that's right. It was striking there in the briefing room because Sarah Huckabee Sanders was offered 2 opportunities during the course of the questioning to reaffirm that the United States has a strong dollar policy. And as you know, that's what Treasury secretaries have said in this country for decades now. Treasury Secretary Mnuchin, speaking in Davos today, said something very different, did not take the opportunity to say that the United States has a strong dollar policy, and in fact talked about some of the benefits of a weak dollar to the United States. The president has said over the past year that he feels that the dollar is too strong. So when Sarah Huckabee Sanders was asked about that today, it was notable that she did not say that the United States has a strong dollar policy. Instead, she talked about the idea of a stable dollar, and she also talked about the idea that the United States has the reserve currency around the world, and that is the official position of the United States, that the United States should continue to have the official reserve currency around the world. But a notable departure rhetorically here on the dollar from the Trump administration, Bill.
And a notable move lower, the dollar index breaking below 90 today. Eamon, thank you. Paul, so what do you think? These moves, whether it's the dollar or interest rates, it's not just about the absolute move. It's always about the speed of it. Is it unsettling markets? A big leg down here today and breaking a psychological barrier.
Yeah, I think we're going to see a weak dollar. There's no question. Historically, we've always said we want a strong dollar, no matter what the administration did.
But do we really?
Yes.
Right, even if we didn't mean it.
But Steve Mnuchin made the mistake this morning of actually telling the American people the truth, which is very rare for a Treasury official. And the good thing about a weak dollar is it's good for jobs, it's good for manufacturing, it's good for exports. It's actually good for a lot of imports because most Asian products are priced in dollars, and so everything you're going to be buying at Walmart in 3 months will be cheaper. There are winners and losers. Let's not make the mistake.
But the Chinese currency is not pegged to the dollar.
Exactly.
So it might be priced in dollars, but that price will still fluctuate. If the U.S. dollar falls too much, it will make imports more expensive.
It will in other places, but not where it's already priced in dollars, like in China. And so people are going to go to Walmart in 3 months and things are going to be cheaper. So on balance, a weak dollar is good for the U.S. stock market and the U.S. consumers and U.S. workers.
Well, they'll go to Walmart and things are cheaper, but nobody's making any money. Jack, let me get you to weigh in on this. We've got not only the dollar moving lower, but rates are going higher. I mean, is there a disconnect somewhere, or is this what normalization looks like?
Bill, you're right on. Exactly what we want to see. You want to see rates go up. And in fact, it's going up with the market going up. Remember, you want to see that rotation. But I got a different take on what Secretary Mnuchin did. You know when a Treasury Secretary talks down the dollar? It's when you're going to repatriate $1.5 trillion back home. Look, if you're a corporation, you want to actually swap those dollars when your dollars are low and you got euros high and the rest of the world high. So I think what he said was brilliant, and I think we're going to feel the big benefits of that over the course of the next few months. Remember,
we got to show all our guests here. Everybody's nodding in agreement with you, Jack.
It is remarkable. In fact, I've been scratching my head wondering when they were going to come out and actually say that. And the reality is that there's going to be a floor under the dollar. With all of the swap activity that takes place over the course of the next few months, you're going to see a floor under the dollar. You're not going to see much weakness, but talking down the dollar before you repatriate is brilliant.
I also think Steve Mnuchin's talking down the dollar a little bit because they're anticipating some trade retaliation that's going to be coming. So if we're going to start getting tariffs from some of our bigger trading partners that we do export goods to, we're going to have a little bit more
to give our exports
competitively priced exports. There's other things going on with the dollar too, besides Steve Mnuchin or Donald Trump saying things about it.
I mean, it's a 3-year low. This didn't just happen.
Well, that's right. But the European economy is going gangbusters right now by all measures.
And Asia.
The ECB, yes, and the ECB has started to really take the punch bowl away and talk about taking the punch bowl away. So you've got those two factors working against the dollar right now.
I feel like could change real quickly, Paul, or tomorrow, is if you have Mario Draghi come out and say, you know what, we're going to take our time, we're going to buy more, we're going to buy a ton more. But I mean, then you would all of a sudden see this whole dynamic flip on its head, right?
You might. The thing is that we have no inflation. Johnson & Johnson came out this morning saying last quarter its products prices were going down. Why is anyone raising rates in an environment like that?
Washing machine prices are going up.
Well, that's because of protectionism.
Right, but if you combine more protectionism with a weaker dollar going forward, that could be a toxic mix for consumers.
All right. We'll leave it at the toxic mess here. Thank you, guys. Keith, Paul, Jack, appreciate it.